What is good, ladies and gentlemen? So welcome to another SK Wealth Academy podcast. Now, a few weeks ago, I uploaded a video called Don't Believe the Hype about silver, because there was a lot of noise going on online about the imminent silver price explosion. In fact, some people even wrote articles saying that there was going to be a default on physical delivery on the most liquid silver futures contract in New York, the 5,000 an ounce contract, and that how silver prices were going to explode to $1,000 an ounce. And although there's only a few articles like that, there was a consensus that silver and gold prices were going to explode higher. That started around the end of January, continued throughout at least the first half of February. So I'm going to start this video by just showing you just a brief short collage of some of those videos that had those price predictions. Now, I said I was going to tell you exactly what I told my SK Wealth Academy patrons, which was just the opposite. So I'm going to start off by showing you the video. Now, my patrons is just the transcendent level and higher, which is just $5 a month and higher. They all receive about 4 to 5 videos every week that range from about, on average, I would say about 7 minutes, but they can be as long as about 10 minutes. So it's just one video every day. And I'll talk about where I believe certain asset prices are heading. So you can see that on February 11th or February 10th, and I note the exact price of gold and silver. You'll see the price of gold and silver futures when I released these videos to my patrons, and then you'll also hear my price predictions and you'll see where it went. You'll see that on February 16th, again, I reiterated because there was still a flood of people predicting and a lot of people hopping on the bandwagon that there's going to be a price explosion higher in gold and silver in February leading into March. And so I just said, even though I am standing against the consensus of what's going to happen, I said, here's the reason why. So I gave a further explanation February 16th. And then at the end of February, once gold and silver prices actually reached my initial prediction for where they were going to go, which was significantly lower, in opposition to all the white noise that was happening online about gold and silver price direction, I even gave further predictions of further declines in gold and silver prices, which you can also see that actually happened on the exact date that I gave them at the very end of February. So if you would like to understand that in my Patreon membership, if you're transcendent level, again, which is only $5 a month or higher, every single week I will send you updates as far as my predictions. Of course, I'm not going to be right about my predictions 100% of the time. There are actually people that get mad at me because my price predictions are not right 100% of the time. But who could be right 100% of the time? But you will see that for the entire month of February and the first week thus far of March, that I've been right about my gold and silver price predictions for 5 weeks in a row. So again, here it is. I hope you enjoy. If you would like to support me, actually a lot of people just become patrons just because of the videos that I upload here on YouTube and of the articles that I publish on my new site at malamalama.com/WordPress. So you can go there and just check out loads and loads of free content that I upload. But if you would like to support me and kick me back something, because for the past 15 years of performing all this work, I've received about $5 in advertising compensation because Google/YouTube just demonetizes all my videos. My channel now is monetized, but I'm almost scared to monetize some of my videos because they go against the mainstream narrative. So I feel like they'll use it as an excuse to shut it down. And I don't really necessarily want my YouTube channel, SK Wealth Academy podcast, shut down just yet until I find an adequate platform to migrate to. So I'm really careful about, and as it is now, it's not like I have 30,000 subscribers like my last channel had. It's not like my videos are getting 70,000 views like they were at my old channel, which is just SK Wealth Academy. So even if I monetize them, what am I going to make? Like 5 cents a video with just a few hundred views? So it's not really worth it. So if you really enjoy what I do, want to show me some love, some appreciation, then just consider becoming a Patreon. Or you can go to my GoFundMe site, which you can find in the show notes below, and help me launch my 20 plus course SK Wealth Academy at some point this year. I hope, because it's all contingent upon the restrictions being lifted on my ability to travel freely around the world. So thanks so much for watching. As always, you remain immensely curious. And here is the video and my past Patreon only videos that you are receiving a sneak peek into. Take care. In the East, February 10th in the West, so let's get started. Well, Bitcoin is still soaring at 45,100 as I speak. As far as where Bitcoin prices will go, I really have no idea. If I do get some kind of strong analysis as far as data is concerned, the futures market, or if a new Bitcoin ETF is introduced, then I'll come back and have something to say. But for now, I really don't, because my prediction from last November that Bitcoin prices would double that I made last November when Bitcoin was 20,000, that would double to 40,000 this year, has already happened. So I'm not ready yet to make any other predictions regarding price, other than just because everyone is assuming that prices will continue to soar higher, because there was talk of Apple. I don't think it happened because I don't really follow the cryptocurrency markets that closely, but I'm pretty sure it hasn't happened yet. But there was talk of Apple buying $5 billion worth of Bitcoin, converting their massive treasury and cash into Bitcoin. And of course, you have the usual people selling their books, like the Mike Novogratzes, that said Bitcoin is going to go to $270,000 before the end of this year. So people still think even at this price, there's really little risk. That is the point of contention, which I would disagree. I would say there's a lot of risk with such a run-up in price so quickly. It doesn't mean price won't go higher, but it just means there's a lot of risk, in my humble opinion. And also because of the rapid rise in Bitcoin, that's why we haven't seen the usual really strong opening in gold and silver asset prices. I don't know why I always say price assets and asset prices that normally greets the beginning of the year. So normally we see a really strong rise in gold and silver asset prices at the beginning of the year. And that is one of the primary reasons why I said the normal bump we have that's seasonal at the beginning of the year is going to be delayed, because of what's going on with Bitcoin, because that certainly diverts away from physical gold and physical silver purchases, which, as you know, is where the bankers really get hurt in their manipulation game. It's through the physical purchases, not the purchases of the ETFs, paper assets, because in my opinion, they're only fractionally backed gold and silver assets. So there's no way, in my opinion, they're 100% backed by physical gold and physical silver as they claim to be in their prospectuses. And you know that I've been saying this, if you've been following me for a long time, ever since those ETFs were introduced, way back in 2005, 2006. I've been saying that since day one, that those gold and silver ETFs have never been 100% backed by all the funds that are deposited into purchasing those gold and silver ETFs, like the GLD and the SLV. So with the GDX and the Huey gold mining ETFs still below their 50-day moving average, I'm still really critical of another price pullback, although it seems to be that the sentiment is that the big price slam happened on the margin raise, and then now we're going into the rebound. I'm not sold on that yet. I am not sold on that yet. I want to see the GDX and the UE pop back up over the 50-day moving average. And in this case, because I'm not sold, I probably won't even see them close at market close 5 consecutive days in a row, not my normal 3 consecutive days in a row. And I'm still seeing a lot of action in the futures markets of, definite capping at the 1850 mark for gold, and a definite desire to take gold back below the $1,800 mark. And if that happens, then silver will probably pull back below $27, back to the $26 a mark. But it doesn't mean that the long-term trend of higher gold and silver prices has been broken. As I said, with Bitcoin prices going crazy to start this year, all it means is that it's being pushed back, because I guarantee you there are no such thing as cryptocurrencies, because cryptocurrencies divert a lot of money that would normally flow into gold and silver assets. I guarantee you, if there were no such thing as cryptocurrencies, that gold would be well over $2,000 an ounce right now, and silver would be well over $35 an ounce in the futures markets, which means, of course, the physical ounce prices would be even higher than that, because they're continually trading at a premium above the futures. To end it all, for those of you that did not ignore my message at the end of last year, around October, November, to not ignore platinum. I told you everybody was ignoring platinum back then. Futures prices were still around $875, and today they traded at $1,272, so that's a 45% increase on the underlying futures price in just about 4 months. So I told you, of all of you may have wondered, why am I still saying that there is downside risk that is still open in gold and silver futures prices, especially silver, because everyone online is saying silver prices are going to go to the moon right now. So why am I saying that there's still downside risk? And here is the reason. The reason is because a lot of people are just learning stuff about the SLV this year, so they think it's new, when it's nothing new, because I'll put a link. In fact, I'll show you a photo where you can go find an article I wrote in 2009, more than 12 years ago, which I stated that the SLV and GLD were probably full of rehypothecated gold and silver, which means physical gold and silver lent out to back many other financial vehicles, just not the SLV and GLD ETFs, as well as the fact that I highly doubted back then that both ETFs were 100% backed by physical, as the prospectuses claimed. In fact, I also pointed out in that article 12 years ago that both the prospectuses for both those ETFs were more comparable to a prospectus you would expect about a pink sheet stock that is subject to almost no regulatory oversight, versus a stock that is actually actively trading on the New York Stock Exchange. So really, there's nothing new there. And also, I pointed out in past years that in some years in the silver futures market, they traded more than 500 times the amount of physical silver that was mined annually that year. 500 times. So these markets have never been fully backed by physical silver. So just because people are discovering it now and don't understand that these markets have worked like this for decades. Evening here in Asia, about hour and a half before markets open, about half hour before the futures markets open in New York, and I just want to update. Earlier in the week, when gold was still gold futures was still around 1,825, 1,830, I told you that I believe that 1750 was a very, very strong possibility. And in futures markets, that gold's already pulled within $5 of that. It's already been as low as 1,755. Now, I think there is enough downward momentum where it will push through that mark, and then be fairly likely even to descend to the let's say $1,725 mark right now. So if that happens, then next week I'll revisit it and tell you what the probability of heading to 1,700. Now, I always told you that, I just gave the $25 to $26 range as far as the range silver could be pushed back to. So silver, I always have said, is a much harder market to predict. It's much smaller than gold, much more easily manipulated. So generally speaking, the good rule of thumb is to look at the mark that I set for gold and don't think silver is going to rebound until gold has reached the marks that I have informed you of. Now, this is nothing to, here's the good news. This is nothing really to panic over. If you're stackers, it'll be just an opportunity to stack, and then when we're ready to go long in the gold and silver mining stocks again, I'll give you the signal and let you know when I think it's time to go back into the gold and silver mining stocks. Now,